Howdy, Jacob here. Today we're looking at Fortune Brands Innovations in the building products industry, 9.4 billion market cap on 11.4 billion enterprise value. They provide home and security products for residential home repair, remodeling, new construction, security applications, US and internationally. Headquartered in Deerfield, Illinois in 1988, was incorporated, and their growth in revenue got very much dampened by COVID, and is kind of been sluggish the last 2 years. If you were looking at this pre-COVID, you would have seen that you'd have been very impressed by that revenue growth. But then obviously COVID hurt them a lot, and then something the last 2 years just been really lagging. Their gross margin, however, is up. Operating margin also up, so both positive, meaning that revenue might be up, 15% or so over the last 10 years, but their operating margin is up over 50%, and their gross margin is up almost over 50%. And so good to see that they're becoming more efficient with the dollars that are coming in. And return on invested capital, very solid. Most recent year, you're looking at 8.1%, but historically has been averaging low double digits. We can see that no R&D spend, just a hefty amount of cost of goods sold. Balance sheet shows just under $400 million cash on hand with no short-term debt and $2.7 billion long-term debt. So they have leveraged their growth, growing from $350 million in long-term debt to almost $2.7 billion in long-term debt. And so not quite as sexy as some of the other figures that I've seen, but their free cash flow has grown impressively. If you leverage and you can get if you do get a positive return leveraged, it increases your return. But again, negatively, it can do the exact same. And so we are seeing good production of free cash flow. So it looks like they've done well with their leveraging, and their debt in relation to their free cash flow has not gone up. That ratio hasn't gone up too much. Their production of free cash flow is mostly acquisitions and share repurchases, with a little bit going to this dividend. So this dividend is looking to be about, let's say, 25% or so of free cash flow. Share repurchases, more than that. Acquisitions, more than that. But again, it's due to their issuance of debt that they've been able to fund these in excess of 100% capital allocation. And so my forecasting is going to assume only 100% allocation between debt paydown, share repurchases, issuing a dividend, and acquisitions and reinvestments. So I think that's enough to get me make my own assumptions for revenue growth. This revenue growth is based on leveraged returns, and so I would go with a simple, roughly 3% growing in line with inflation, maybe a little bit. Even if there's some slow times ahead with some acquisitions, they can at least get 3% growth rate. And then for margins, they're a little bit up and down. Average is looking about 12%. So let's do 11 and 12%. Share change, 1% for them is about 94 million. Offsetting stock-based compensation, you're looking at about 130. I think that's pretty reasonable. That's going to be about 25% of free cash flow. Their terminal PE, probably looking at right around market average here. I don't know why it'd be anything more than that. The dividend, historically, they've increased it, or they actually dropped it in the most recent year, but historically, they've been increasing it pretty consistently. So I'm just going to keep it where it's at. I'm not going to increase it or do much more than what it's at right now. And we're saying the company stock price needs to fall pretty much in half before we get the return we're looking for here. So not quite at the price that's most attractive to me. Some metrics of the business are looking pretty attractive, others not so much. So it's definitely not the perfect business. Not one that I need to get at the most cheap price possible, but definitely I'm not sure that the metrics would grow into a solid business to get you a great return. So you would still want to get this. I would still want to buy this company at a bit cheaper of a price. Hope you enjoy this video and have a great day.